What's up, everyone? Today, we're diving into the world of investing. We'll break down popular investment options you should have on your radar. From the stock market to real estate, we'll cover it all. Remember, each of these investments comes with its own risk and potential return profile. It's not about finding the best investment, but the right one for you. Before you throw your money at anything, you gotta know what you're aiming for. What are your financial goals? What's your risk tolerance? And how long are you planning to invest your money? Keep those questions in mind as we explore these options. Let's get started. First up, we've got stocks, also known as equities. When you buy a stock, you're essentially buying a tiny piece of ownership in a company. It's like owning a share of your favorite bakery, except it's publicly traded on the stock market. Now, stocks have the potential for some serious growth. Just look at companies like Apple or Tesla. But remember, the stock market can be volatile. Prices go up, prices go down. It's a bit of a roller coaster, so be ready for a wild ride. High risk, high reward, you know the drill. Next, let's talk about bonds. Bonds are like loans you give to governments or companies. You lend them money, they promise to pay you back with interest. Bonds are generally considered less risky than stocks. They offer more stable returns, but don't expect to get rich quick with these. Think of bonds as the slow and steady investment in your portfolio. Now, if you're feeling a little overwhelmed with picking individual stocks or bonds, mutual funds are a great option. Imagine a basket of different stocks or bonds all grouped. That's a mutual fund. They're managed by professionals, so you don't have to be a stock market whiz to get started. Of course, the risk and return of the mutual fund depend on the assets it holds and its overall strategy. Similar to mutual funds, we have exchange-traded funds, or ETFs. ETFs are like baskets of securities that you can buy and sell just like individual stocks on the stock exchange. They often track a specific index, like the S&P 500, making them a great way to diversify your investments. Plus, ETFs typically have lower fees compared to mutual funds, which is always a win. Let's move on to something a little more tangible: real estate. Investing in property can be incredibly rewarding. You can generate rental income and benefit from potential property value appreciation. But keep in mind, real estate requires a significant amount of capital upfront. It's also a lot less liquid than stocks or bonds. You can't just cash out overnight if you need to. Recurring deposits, or RDs, are a popular investment option, especially for those who are just starting out. With an RD, you deposit a fixed amount of money regularly, like every month, and earn interest on your savings. It's a disciplined approach to saving and helps you build wealth gradually. RDs are relatively low risk, making them suitable for conservative investors. Fixed deposits, or FDs, are another popular investment avenue. You deposit a lump sum of money with a bank for a fixed period, and in return, you earn a predetermined interest rate. FDs offer guaranteed returns and are considered very low risk, making them an attractive option for risk-averse investors. Now, if you're looking for a long-term investment option with tax benefits, the Public Provident Fund, or PPF, is worth considering. It's a government-backed savings scheme in India that offers attractive interest rates and comes with a lock-in period of 15 years. PPF is a safe and secure investment option for those looking to build a retirement corpus. Another retirement-focused investment option is the National Pension Scheme, or NPS. NPS is a market-linked retirement savings plan where your money is invested in a mix of assets like equities, government bonds, and corporate bonds. The returns and risk depend on the chosen asset allocation. For those of you who prefer investing in gold, sovereign gold bonds, or SGBs, are a great option. These are government-issued bonds that are linked to the price of gold. SGBs offer a fixed interest rate and are considered a relatively safe way to invest in gold without having to worry about storing physical gold. Finally, we have post office schemes, which are government-backed savings options offered by the Indian Postal Service. These schemes are known for their wide reach, attractive interest rates, and tax benefits, making them suitable for conservative investors, especially in rural areas. So, there you have it. 11 popular investment options to kickstart your investment journey. Remember, the key is to match your investments to your financial goals, risk tolerance, and time horizon. Do your research, consider your options carefully, and don't be afraid to seek advice from a financial advisor if needed. Investing doesn't have to be intimidating. Start small, stay informed, and watch your money grow. Thanks for watching. Don't forget to subscribe for more financial tips and tricks. Until next time.